Let the trading begin. Well, we're coming to you from the Exchange Bar here at the Sarova Stanley, and this is the birthplace of the securities market in Kenya, dating back to 1954. Good evening. Thank you very much indeed for joining us. And this is the Trading Bell. My name is O'Brien Kimani. Tonight we want to look at the Central Depository and Settlement Corporation, a body whose mandate is to ensure that your shares are in order. And who is joining us on the set is CDSC Chief Executive Officer Rose Mambo to tell us more about CDSC and what they are doing about the market. So thank you very much indeed for joining us on the Trading Bell.
Thank you for having me.
What a significant place, of course, for the market. I want to find out from you, when you look at the journey that the securities market in Kenya have covered in the last 6 or so decades, what conclusions do you make first of all?
It's a growing market. I think we take pride in the fact that the market has been in existence for over 50, 60 years. And over time, we have actually seen growth in the number of listed companies. We've seen growth in the number of investors on the market. And we've also seen things like automation coming into play. So we've moved from manual markets to automated markets. Mm-hmm. And now we are looking forward to introducing new products, new services, and even new markets for investors. Mm-hmm.
What is this one thing that has happened in the market to you that has shaped how the face of the market?
I think automation was a game changer. Mm-hmm. Because before that you had people dealing in their paper certificates. You would come to the market, you trade, and then you have to wait maybe 14 days before you get your certificate or get your transaction settled. Mm-hmm. So with automation, we're able to bring that down to 3 days. We are able to deal in very high volume and high value transactions. So IPOs like KenGen and Safaricom would really not have been possible if the market had not been automated. Mm-hmm. So that was really for me a game changer. The automation has made so many things possible.
Mm-hmm. We understand the role of the Capital Markets Authority, which is to regulate the market, mm-hmm. and the Nairobi Securities Exchange, which is to offer the platform for people to trade. But what is the role of CDSC in the whole mix?
So CDSC actually came in to bring in that automation that I'm talking about. So we took the paper certificates and turned them into electronic records. So it means that anybody holding a paper certificate had to hand it in and instead be created as a security holder in the CDS with a CDS account. Mm-hmm. So anytime there's a transaction on the exchange now checks your CDS account, confirms that you have securities in that account, and then is able to trade on your behalf. If you're a buyer, you similarly must have a CDS account, because once you buy, those shares will be put into your CDS account. Mm-hmm. And apart from the securities side, we also settle the cash side. Mm-hmm. So all the people who trade, all the stockbrokers who trade in the market have to settle the cash. Mm-hmm. And so we manage transferring the cash between the stockbrokers for the buyers and the sellers. Mm-hmm. And once the cash has been transferred, we then now move and transfer the securities from the sellers to the buyers. Mm-hmm.
And we know the issues of insider trading, has been, a big problem in the Kenyan market. But of course, we have seen a slowdown in the number of insider trading cases. How has automation of the market helped to deal with insider trading?
It has helped in the sense that the regulator is now actually able to have an electronic view of what's happening in the market. Mm-hmm. So they have a module, they call it the surveillance module. So anytime the market is running, they are able to view what's going on in the market, and they are able to feed in certain algorithms within their surveillance model, where they say if XYZ scenario is present in certain transactions, then you raise the flag, and you know that that is either possible insider trading or possible market manipulation, and then they are able to dig further and investigate that kind of a transaction.
Mm-hmm. And how has it helped the market?
Transparency is always good for a market, because we deal on trust. Wherever you're dealing with cash, with people's investments, you're dealing on trust. So people need to be able to trust the system, trust the players. So when you have strong surveillance modules and a strong regulator, then the investors have confidence that any malpractices will be caught fairly quickly, and it also acts as a preventative measure. If someone knows that there's surveillance models that can catch them, then they don't practice bad behavior.
And we still remember, the cases of Nyaga stockbrokers and discount securities, which somehow dampened the spirit of investors. Have we recovered from the shock of those two collapsed brokers?
I think we are well on the way to recovery. One thing that I will still say about automation is that it was automation that made it possible for us to catch errant brokers like those two, because then they were no longer able to hide behind inefficiency, behind all the paperwork. So automation was able to weed out the inefficient brokers. At the same time, I think Kenyans are fairly savvy and they are able to understand how the market operates, and they're able to identify that these are isolated cases, because since that time we've not had any such incidences. So yes, it did put a damper on the market briefly, but I believe that we've now recovered and people are still excited about transacting in the market.
And what are you doing with other market players like CMA, NSE, to ensure that you boost the number of account holders from the current 2 billion to, let's say, maybe 10 billion account holders?
We have investor education programs running throughout the year and across the country. So we'll have capital markets open days in places like Eldoret, we'll go to Mombasa, we'll go to Kisumu, we'll go to Central Province, and we'll just have an open day where we have ourselves, NSC and CMA, talking to investors about their investments, answering their very specific questions about specific investments they've made, or just generally giving investor education and talking to them about what the market is and what it's about to invest in the market. We go with some stockbrokers who are then even able to service their clients during the open day. And we then leave them with reading material, we leave them with contacts in case they want to follow up or they have follow-up questions. And this, I think, has helped increase the number of people who have awareness about the capital markets, and that again translates to people investing in the market.
And how easy is it, for you to open a CDSC account?
It's fairly straightforward. It's very similar to opening a bank account. You go to your stockbroker, and your stockbroker will take you through the normal know your customer procedures. He'll ask for your ID, he'll ask for maybe some proof of your residence, your address, your telephone number, your email address, your photograph. And once he has done all these things, he'll open the account for you. And it's that simple. Yeah.
And are there fees required, or is it free of charge?
Oh, it's free of charge. Opening a CDS account is free of charge. Yeah.
And recently we have seen, government, coming up strongly to boost the number of account holders, CDSC account holders in this country, especially with the launch of Emakiba. Have we had any impact on your business, from Emakiba?
Yes, there's been a lot of interest. Of course, CDSC is running the depository for Emakiba. So when we did the pilot, where we sold 150 million worth of a bond, we had 100,000 people opening their CDS accounts within
150?
100,000. 100,000, yeah. And it was over a period of, say, 10 days. And so that generated a lot of interest. And so we are looking forward to the launch of the main bond, because this was just a pilot. The main one is coming. And I think that we will be able to stimulate quite a bit of interest in the market, and especially because of how easy it is to open a CDS account on your mobile phone, invest on your mobile phone, and even buy and sell, trade on the market through your mobile phone. And I think that ease of entry, ease of access, and ease of exit is what will be exciting for Kenyans.
The fact that, with the Emakiba, which was a fairly small bond, 100,000 investors, coming into the market. This is a clear indication that investors are waiting to be told, come, we are ready for you.
I agree, and I think it's for us to actually go out there and tell them, we have this product, this is how you can benefit from this product, this is how you can save, these are the returns you can get from the product. And when we tell them, I'm very sure that they will be interested in participating in the products.
Do we have any other product in the pipeline that you think is going to revolutionize the market?
Yes, we're actually in the process of upgrading our systems. And with the new systems, one of the key challenges we have in our market is liquidity. I think not more than 3% of our market capitalization trades on any given day. And so we want to enhance the liquidity of the market by offering something called securities lending and borrowing. So on the market you have investors like pension funds who buy huge amounts of shares, but they really don't trade them. They just keep them in their books. And then you have, on the other hand, traders who can actually buy and sell these securities over maybe a period of 12 months and make some money from that and enhance the liquidity of the market. So we'd like to facilitate a situation where one is able to borrow those securities from a pension fund, trade with them throughout the year, probably pay the pension fund, a fee for borrowing the securities, and then make money on those transactions. And at the time when the pension fund requires the securities back, you give them back to the pension fund. They will still be earning their dividends or any corporate actions, but really the securities are still working in the market and generating more liquidity.
And as an industry player, is there something that you would point that would say, if we were to do ABCD, then we are likely to stimulate the market in a big way?
Probably enhancing liquidity, because one of the things that we try to do is invite more international investors. But international investors want to place huge amounts of money to make it worth their while. But our liquidity is so small that the international fund manager will look at our small market and be like, it's really not worth my while, because I'm only going to put maybe 1% of my portfolio in that market. So if we are able to grow the number of listed companies, grow the number of products, make our market much bigger, then we attract the bigger investors. Otherwise, we are small and we remain small because we're not able to attract those bigger investors.
And what do you think we should do to attract, big heavy hitters in the market?
We really need to enhance the number of listed companies to begin with. We've been static, operating between 58 and 68 for the last 10 years or so. I think we really need to have a campaign that speaks to our local companies. What is it that we need to do to bring you to the market? Why aren't you listing? How can we incentivize you to come and list your company on the market? And I think if we grow that basket, then we certainly will be bringing in more international investors into our market.
Rose, as we wind up this interview, and of course as we continue to sip our signature drink here, I want you to look into the market in the next 10 years and predict for us, where do you see this market?
The future is bright. I think there are many exciting things happening on the Kenyan market, and I think right now we've spent a lot of time building the basic infrastructure, getting over our automation, meeting standards of international best practice, and really just putting our house in order. But now we are saying the next 10 years, we are going to bring in new products, new markets. We are looking at the NSE now has a derivatives market which they're just about to launch. We'll be looking at probably commodities markets. So I think the future now is in how many new products and new markets we can launch in our market, because that really is going to be the catalyst for growth.
Okay. Rose, thank you very much. And of course, by the way, cheers.
Cheers.
Enjoy your baobab. This is baobab drink. It's non-alcoholic, right?
Yes.
And I understand it's very healthy. Can you take a sip, actually?
I'll tell you
how do you do this? Oh dear. That's it.
It's pretty good. It's pretty good.
Oh, exactly, yeah. Very nice, actually. Cheers to you too.
Thank you.
Well, we've been talking to Rose Mambo. She is the Chief Executive Officer of Central Depository and Settlement Corporation, helping us to understand where is the market and where we are going. We're coming to you from the Exchange Bar, the Stanley Hotel, and this is the birthplace of the securities market here in Kenya. Stay right here. We are back shortly. trying to make sense of the figures. And Churchill Ogutu is a market analyst from Genghis Capital joining us here. Thank you very much. Churchill, first of all, we want to hear your thoughts on the mobile-based bond that was launched on Friday, targeting to raise 1.2 billion shillings with a green shoe option of about 3.8 billion shillings. Do you think the government is becoming more ambitious here?
Well, I think it's more to do with financial inclusion. I'm looking at it from the perspective that, for one, the minimum amount getting into this bond is 3,000 shillings, so it's targeting the lower end of the pyramid. And, well, it's giving a return of 10%, and if you weigh it against the minimum that the banks is supposed to give you 7%, so I think this is more in terms of broadening the products that is on offer. In terms of the 1 billion right now, I saw reports that so far it's actually achieved 17 million, which is quite paltry with the time frame that is meant to for the bond trading. So it's something that is still much to be done. I thought that the 3-month period, we saw that the turnover so far in the 150 million for the bond turnover, it came to around 6 million, so it's a bit of a small turnover compared to the full value in the bonds, which is more pointing towards it's more of a savings product rather than an investments product. Mm-hmm. So I think that what the government needs to do, at least to achieve the full attainment of it, is at least to do better marketing. At least there's been some much headway done with some advertisements to generate some public interest towards it, but I think the 3,000, and of course many people would want to get into this, but they feel that they're limited with the 140,000 capping for M-Pesa. So I think now PesaLink will now be able to achieve greater inclusion towards it.
Mm-hmm. Yeah. And of course we have heard it from the National Treasury Cabinet Secretary that they are working with Central Bank of Kenya, of course, to raise the 140 cap to around 500,000 shillings. I want to hear from you, what will be the impact of Akiba bond on the equities market?
Well, I won't think it will have much an impact on it, because one, Akiba is now on the fixed income side. And then looking at the volumes that they're targeting, I mean, it's 1 billion, and then there's a green show option of 3.85 billion, so it's targeting 5 billion. So I think it's quite paltry compared to what the equities market is currently offering. Yeah, but I think in terms of short term, I mean, with the guaranteed returns of 10%, so there'll be a bit of some movements towards it, just for I'll say parking, as they still wait for some investments opportunities to come in the equities market.
Let's now have a look at the market, and all the 4 indices of the market are down by between 1.4%. Has the market normalized? Bearing in mind that every time you're going to the election, we usually see the market somehow becoming bearish.
Well, what you saw second quarter, I mean, it was one of the best performing quarters in recent past. But right now, I think most of the participants, majorly the local institutional investors, they're trying to map up their strategies. So right now, there's a bit of they haven't been participating in the market to at least hold to support the rally that we saw towards the end of last quarter. So I think it's something which will extend the next 2-3 weeks before now the market returns to what we saw in the second quarter. In terms of the foreign investors' participation, they are not weighing the risk of political uncertainties as much. I think they have recalibrated downwards their political risks, which really supported the markets in the second quarter. But I think right now, I mean, it's just a bit of some market strategies being done by the local institutional players.
And as we wind up, I also want to hear from you. Let's move to the top gainers table, DCOMS East Africa. What's happening? Appreciating by 8.33%. And top losers, Cooperative Bank, leading the pack with about a 15.92 contraction. What is not happening?
Well, in the top movers, the likes of Deacons, the likes of EA cables, East Africa cables, I think it's more to do with speculative trading, bearing in mind that, I mean, right now the major players that are out there re-strategizing for this third quarter and also for the final half of this year. In terms of cooperative, I think, I mean, there's been a bit of some support at around 14 shillings price level. I mean, investors, we saw the other day Moody's coming up with the first time rating for this particular bank, actually looking at there'll be a bit of some loan growth buoyed by the strong SACCOs deposit base that they are having. So I think that, well, this is just a one-off thing, but going forward, at least it will now be able to at least rebound back from that support level you're seeing at 14 shillings. Yeah.
Thank you very much, Churchill, for joining us here.
Thank you.
Churchill Ogutu is a market analyst at Genghis Capital, joining us here on the Trading Bell to help us make sense of the figures. This is the Trading Bell. Stay right here.
My name is Patrick Munene. I want to know what ETFs are in trading.
ETF in full means exchange traded funds. I'll look at exchange traded fund as comparing it to a mutual fund. It's a fund which is traded in the exchange. If you look with the mutual fund, you can only trade it once a day, but with the exchange traded fund, it gives you the opportunity for intraday trading. So ETF basically tracks indices, or it can track equities and also tracks commodities, and it's majorly used in the developed markets, and it's now, right now, it's available in the NSE with the gold ETF.
Well, the cradle of securities trading here in Kenya, the exchange bar here at the Sarova Stanley, taking back to history. Back in 1954, this is where it all began. My name is O'Brien Kimani. Always a pleasure to have you on this program. You have been watching the Trading Bell. Remember to get in touch with us. Our SMS line is 22162. Remember to start with the word BIZ, that is B-I-Z. Our Facebook page is the Trading Bell TV show. My Twitter handle is at O'Brien Kimani, and at the Trading Bell is our Twitter handle. We'll see you again next Thursday, same time right here on KBC Channel 1. On behalf of the entire Trading Bell TV crew, we wish you a good night. Back to broadcasting hours.